Hello, good evening. It's Jeffrey Christian. It's January 4th, Monday, the first business day of the year. It's actually about 5 o'clock or so right now. And I want to take a little bit longer than usual because since it's the beginning of the year, I want to cover several topics. First off, the gold price rose $50 today. Silver is up about $1 from where it was at the end of trading last Thursday, the previous business trading day. Palladium had risen sharply, but they've come back off at the close in New York. We saw very strong prices, not only for precious metals, but for oil, copper, other commodities, equities today for a variety of reasons. And we expect it to continue. CPM Group has been talking about gold touching $2,000 or so yet in January and February. We've been suggesting that that could happen for probably at least 5 months or so. And we still think that that could happen. We got up to about 1946 at the close of business today. We'll see where we go in January and February. We don't think that prices would stay there. We think they'd come back off. I wanted to talk today really 3 broad topics. One is what to expect in 2021. In terms of politics, economics, the pandemic, and what it means for gold, silver, and PGMs. And then how to deal with it. And then I want to talk a little bit about pitfalls to avoid. I've taken the last 12 days off to sort of try to detox from 2020 and rebalance my thinking and everything else to prepare for what we expect to be a pretty volatile and unsettled 2021. And, today is the 4th of January. Tomorrow is the Georgia election. Wednesday is the battle royale in the Congress over the Electoral College votes. Meanwhile, you have Brexit now Brexited, and Britain is on its own, and we're already starting to see some of the ripple effects. I spent a lot of time over the last 12 days thinking about stuff. One of my sons was visiting, and we actually spent some time talking about conspiracy theories and the Flat Earth Society. I saw Greta Thunberg turned 18 the other day, and she had a Flat Mars Society t-shirt on. I thought that was pretty good. And so I want to talk a little bit about the pitfalls to avoid when investing. And some of this is stuff that we brought out in 2016. Some of it's that we brought out in 2018, but I want to run through various issues there. You can see on this page the last area, 4 sins of intellect, how investors lose in the markets, investing versus chasing speculations, the nonsense of bubbles, which is really related to that, and conspiracy psychology to avoid. We talk a lot about, well, what is it that causes people to have conspiracies, to believe conspiracy theories and wild conspiracies? And first off, let's say, there are conspiracies, and there are things that some people would say are conspiracies. Some people would say that the United Nations is a conspiracy because it's a bunch of guys getting together and agreeing how to try to avoid the next world war, which is why the United Nations was created. Some people would say that the IFC or the World Bank are conspiracies because it's a bunch of countries getting together and deciding how to parse out money to help other parts of the world. So there's a conspiracy psychology, and what we've always said in dealing with gold and silver conspiracies is that in order to understand it, you have to understand several things. First is there are different people within the community of conspiracy theorist believers. And the other thing is you have to realize that, well, the groups are, first off, you have the people who make their living marketing conspiracies. This is what they do. In some cases, as Eric Townsend has eloquently pointed out, and Nick Barishoff before him, they do that because they can no longer legally be involved in stocks or bond markets for various reasons of malfeasance and regulatory compliance issues, so that they are now involved in gold and silver, and they can't be involved with gold and silver futures and exchange traded options. So they're in that market, and they have a nice little cottage industry putting out conspiracy theories and trying to scare people into buying gold for all the wrong reasons. You're never going to convince them because this is their job. There are another group of people, which Eric Hoffer called the true believers, and you're never going to convince them. And Eric Hoffer, when he coined the term true believers in the late 1940s, looking at people who had shifted from being fascists and Nazis to being communists, he pointed out that showing true believers empirical evidence, facts, perceived stuff, and actual evidence will never convince them to change their beliefs, because to change one's belief based on empirical evidence is heresy. You're not talking to somebody who's looking at scientific information and saying, let me see what the evidence shows me. You're talking to somebody who has a belief system, and they're looking at scientific information and parsing it out to find the things that support their belief system. So you can't convince them. There are other people who are more rational and actually can think logically and critically, and they look at the world and they see things that aren't right in the financial markets and the economies and the government and business. And it's easy for them to say, well, what am I looking at? Oh, wow, these guys have this conspiracy theory. Because conspiracies are all based on a kernel of truth, and then you blow it up out of proportion. Those people you can educate. They are what people with PhDs in education would say are educable. You can educate them. You can say, no, 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 it's not what it looks like. It's not that grand conspiracy. It's not even a small conspiracy. It's little guys manipulating the markets around the edge. And you see this over and over again. There were problems with the New York City Fire Department and Police Department not communicating with each other during the first Trade Center bombing in 1993. The fire department did some bad things as a result of that. And it cost a lot of people lives in 9/11. So when people start saying what went wrong in 9/11 and why couldn't those people get to the roof to get picked off by a helicopter, the fire department didn't want to answer, because the answer was really embarrassing, and their bad behavior cost hundreds of lives. It's not that there was a grand conspiracy. It's not that the government had planted dynamite inside the building. It's that some people had done some pretty dumb things because of the rivalry between the fire department and the police department, and it cost people's lives. I was sitting in my 37th floor office 4 or 6 blocks away from the World Trade Center and watched the planes hit, and I watched the towers collapse. I heard the rivets popping as the towers pivoted over to the sides. I didn't hear any dynamite. Anyway, that's conspiracy theories. And I put in the bottom of this page a link to a really good half-hour discussion that BBC has on its website on why conspiracy theories exist. And it goes to the last point that we made, which is that if you want to understand why people believe in conspiracy theories, you don't look at the theories, you look at their psychology. Because the belief in conspiracy theories has nothing to do with the subjects of those theories and everything to do with the people who believe them and their psychological composition. So let's back up. What do we expect for 2021? Well, we have vaccines coming out. And frankly, it's going to take at least 6 months for a significant enough portion of the population in the United States and North America and Europe to be vaccinated for this to have a public health benefit. People who are being vaccinated will immediately have health benefits, but on a public health basis, it's going to take at least 6 months before we can get to a point where we can start talking about moving toward something normal that is not going to be what was normal in the past, but will be a semblance of normalcy. That's the good news. On the political and economic front, things are in much worse shape. We have massive debts. We have the need to support small businesses, individuals, and other entities around the world. We have a tremendous need for financial supports, economics are in vast disarray, and the politics are dysfunctional. They're dysfunctional in the United States, they're dysfunctional in the United Kingdom, they're dysfunctional in Europe and Russia and China, and all of those things have not gotten better, and they'll probably worsen over the course of 2021. That means that gold and silver should do pretty well. PGM should do pretty well because the auto industry, despite the political dysfunctionality and the economic problems, the auto industry probably will recover, especially in the second half of this year and 2022. And that's going to support PGMs. And the expectations that that's going to happen will support PGMs. Gold and silver will do well because investors will continue to look at those big three issues, politics, economics, and the pandemic, and say, we're not out of the woods yet, and things are bad. That leads to the next topic, how do you deal with it? And I have this thing here, you are responsible for yourself. And gold has always been a matter of personal responsibility. That's sort of the essence of owning gold, is taking responsibility for your own security. Prior to 1913, people knew that. With the Great Depression and World War II, they sort of realized that maybe they could rely on other people. And now I think going forward, they're going to realize you don't rely on governments and you don't rely on society. You really are going to be responsible for yourself. And part of being responsible for protecting yourself against those big three uglies is going to be to own gold. Buy it and hold it as a safe haven, as a portfolio diversifier, as a quasi-currency, as an alternative store of wealth, as a portfolio diversifier. We still don't think that inflation is going to be a problem. We still think that deflation is a much bigger problem, and gold will help you in deflationary times as well as in economic inflationary times. We made a joke, building back better, Mr. Biden's campaign promise or theme, building back better with gold. Because if you think that a new government in the United States is going to fix everything, well, that's not a conspiracy theory, but it's almost as tenuous as one. The people who won on the Democratic side are corporate Democrats. They're part of the same group of corporate Democrats and Republicans who have run the country since World War II and have created many of the problems that we're facing. A lot of those problems don't last over the last 4 years or 12 years or even 20 years. They go back to the 1950s and the 1980s. And these people have this tremendous hold on the economy and on government. And they use it to their own advantage and the advantages of their friends. These are not socialists. They're not radical reformers. There are some socialists and radical reformers in the Democratic Party, but the powers that be in the Democratic Party are the same people who have brought you the same Democratic and Republican mess for the last 70 years. And that's going to continue. It's their turn at the trough. That's where we're at. In 2009, I was in Washington. I was speaking at the World Bank about food security and other commodity issues. And while I was there, it was early March 2009. Obama had just been inaugurated about 5 weeks earlier, and the Republicans kept calling him a socialist. I was talking to a fellow who was a client, very prominent donor and influencer in the Republican Party. And we were talking, and I said, you know, these guys aren't socialists. And he said, we know that. I said, well, why are the Republicans calling them socialists? He said, well, 1928, 1932, when the Nazi party in Germany was a minority party, between those elections, they kept saying to everybody, you don't have to vote for the National Socialists. You can vote for the communists and the socialists. And they drove that message home. And they said, you don't have to vote for us. You can support the socialists. Even though other parties weren't necessarily socialistic, they were more democratic. at the time to be true. Yeah, there was a Communist Party, there were several socialist parties, but the vast majority of non-national Socialist Party members didn't belong to those. They belonged to mainstream Democratic parties. I said, so the Republican Party in 2009 is taking its campaign cues from the Nazis? And he said it worked for them. So when people tell you that the Democrats who are taking control are socialists, find somebody else to listen to. These guys are not socialists. They're corporate Democrats, the same as corporate Republicans, buy their suits and their Gucci shoes at the same stores. They eat their expense account lunches at the same restaurants on K Street. It's really not a change. You're going to have to be responsible for yourself and your family's well-being. And part of that is going to be to own gold and silver. So let me go into some of these pitfalls. I have some slides, again, as I said, this is from a speech I gave in 2016, January 2016. Why do 90% of investors lose money in commodities? The number in the futures market. And the answer is the four sins of intellect. There's ignorance, which is a lack of knowledge. And in the commodities market, that means bad data, bad statistics, bad information. I could write a book about all the bad information and data, not from the conspiracy guys and the marketing snake oil salesmen, but from companies that hold themselves out as legitimate investment research companies and commodities research companies. The next sin is stupidity. It's not ignorance. Ignorance is not knowing things. Stupidity is a lack of ability to think critically, to take information and say, this is good information and this is bad information. We have a rather crude term that we sometimes use among ourselves at CPM Group when we hear a piece of information. There was a crazy guy in the market way back when who said that the Central Bank of Brazil had come in over 2 days, bought 60 million ounces of gold to cover naked calls that it had sold. Totally preposterous. And basically what we said is, euphemistically, take a break, wander down a hall, and think about that. Because if you think about it critically, you realize that's totally preposterous and unsupportable. Critical thinking is important. Another part of that is trying to understand what other people base their beliefs and their thought process on, because that will give you insights into the veracity of what they do. Commodity market equivalent is bad analysis. You can have good data, but if you're looking for a bug, you're going to find a bug, and you will believe that bug. And as I said earlier about conspiracy believers, you will pick out the data that supports your belief system as opposed to analyzing the data and saying, oh, this is what the data means. The next sin is delusion, pretty obvious, believing false ideas or sets, being gullible, foregoing data and analysis for beliefs. I've seen this so many times with people. They make a fortune in real estate or business. They create their own industries, let alone companies. They do everything in a very methodical fashion. They become very wealthy. And then when it comes time to buy gold, they throw all the data out and all the analysis, and some guy in sackcloth sitting on a pile of ashes says, no, the world is coming to an end. Put all your money in gold. And 40 years later, he's still saying the world's about to come to an end, and you still have your money in gold. And maybe you did well, and maybe you did poorly. But if you bought that gold in 1980, it'd be worth twice as much as it was then. So delusion is a big problem. And then the other one is self-delusion, which is a subset of that. And those four sins of the intellect cause people to make mistakes. How's that shake out? You have good data, bad data. Good analysis, bad analysis. If you put it into a matrix, 3/4 of the opportunities are to go wrong. But it's even worse than that, because the weightings are such that you have a 10% chance of getting it right, a 10% chance of having good data but bad analysis, a 10% chance of having bad data but good analysis, and you've got a 90% chance of getting it wrong. And that's why 90% of the small investors lose money when they're investing in commodities. Now, on to Bitcoins, and I'll talk about that in a little bit more in a second. It's equity markets, not Bitcoins, that are distracting investors from gold. The cryptocurrency market is really small. Now, these are data from early 2018. The cryptocurrency market is still very small, and it will continue to be small. The equity market is enormous, and the gold market is somewhere in between. And if you look at where the money's going, it's not going to cryptocurrencies. People who are going into cryptocurrencies are not investors. They're speculators or they're gamblers. We have clients who are long-term gold and silver equity investors. And on a daily basis, they go into the cryptocurrency markets and they play around, but they always come home flat from the cryptocurrencies while they're staying long gold and silver. Because gold and silver for them are investments, and cryptocurrencies like a roulette table. That's really what it is. Actually, it's worse than a roulette table. And they are, in fact, the antithesis of gold. Gold is a tangible asset that's nobody else's liability, and the value is determined by the full faith in gold in the market. National currencies are an intangible asset that have unlimited supply, and their value is based on the full faith and credit of the country's governments that issue those currencies. Cryptocurrencies are an intangible asset, a jot on a computer. They're actually unlimited in supply. People will tell you that they have a limited supply, but what they mean is there's a guy who we don't know, not even a government. National currencies have unlimited supply because the governments can say, well, let's issue more. But with cryptocurrencies, there's a guy who you don't even know who can flip a switch, click a couple buttons, and double the supply of those cryptocurrencies. They actually have unlimited supply, despite what any marketing person tells you. And they are based on the full faith of an anonymous person in the market. No creditworthiness. I mean, you've seen a couple events where something will go wrong in a cryptocurrency, and you'll find people standing on the Ginza in Japan saying, to whom do we complain? And the answer is your mother, because she taught you to believe in this kinds of garbage. Now, Bitcoins have risen very sharply lately. That's interesting. What's the value of that? The value is nothing. They've risen sharply not because people are investing in Bitcoins, but because they're trying to ride that rise in value. That's a gamble. You could say it's speculation, but it's really just a gamble. Tesla stock have risen very sharply. Tesla now has market cap greater than most of the other real auto companies, even though they managed to eke out 500,000 vehicles last year. The price to equity ratio of Tesla, it's hard to measure because it really hasn't had earnings, price to earnings ratio. It hasn't really had earnings to speak of until recently. But depending on who's doing the calculations, the PE ratio for Tesla stock is somewhere between 1,500 and 2,700. So it would take 1,500 years to 2,700 years for Tesla to earn enough money to justify its price. So if you're buying Tesla stock, you're not investing in Tesla, you're gambling. You're trying to ride that line higher, and you're hoping to get out before you find out that you're the last fool in the market. So that's what I was talking about earlier when I said the difference between gambling and investing. You invest in gold. You can speculate in gold. You can trade it like a gamble. A lot of our clients have a core physical gold that they hold, a position that they hold as an investment, and then they also play the market on a shorter term basis. But Bitcoin and Tesla and a lot of other things are not investments at this point. They're speculations. That's all I've got for today. Like I said, it's longer than we have been doing, but I thought at the beginning of the year, I would share some of my thoughts about these conspiracy theories and the difference between investing in gold and speculating in speculative gambles that don't make any economic sense. As Warren Buffett famously said, he doesn't like to invest in things that he doesn't understand. It's a very good thing. And if something looks like it doesn't make economic sense, study it objectively. Don't let yourself be deluded by marketing people or yourself, or your need to believe in things, or your desperate search for yield. Do your analysis, get good data, get good information, and take care of yourself. Take care of yourself financially, and take care of yourself in terms of cleanliness and staying away from people who don't wear masks. Thank you, and talk to you next week.